After Tesla's run up to $1,200 a share, we saw a lot of EV stocks and EV related stocks follow this upwards trajectory. It was mostly due to the infrastructure bill that was passed recently at the Senate, which had a component of charging infrastructure built into it. So I actually took a position in ChargePoint after my Tesla video, which you should check out if you haven't already watched it, which was a small position, but it made a significant gain in terms of percentage. So I'm going to hang on to it and see what happens. But the question for today is, should we invest in the Rivian IPO? Hey everyone, my name is Bill Hawk, and today I'm going to be helping answer the question as to whether Rivian is the next Tesla. Because if it is, of course, I know you don't want to miss out. And that's what we do in this channel. We talk about stocks, crypto, real estate. So at any point in the video you receive some value, please hit the like button and subscribe because it helps me out with the YouTube algorithm. This channel is new and still growing. I'd like to think it's growing at least. So yeah, help the brother out. The Rivian IPO is getting a lot of hype, not only because of the investors backing up the company, but also because of its size. It's coming out public at a $65 billion valuation, which is huge. It's one of the bigger ones of the year. And it's selling mostly nothing. It's not selling anything yet, but it's looking to sell the first EV truck that's going to hit the market. Rivian was founded in 2009 by then 26-year-old RJ Scaringe, or that's how I at least think it's pronounced, an MIT grad back when Tesla launched its Roadster. Rivian was also looking to build an electric sports car of its own, but it eventually pivoted to a high-end EV maker for an adventurous crowd, sort of like what the Land Rover is for gas-powered vehicles, but its trucks also have a lot of utility for the commercial user. The company is now delivering two consumer vehicles, the R1S SUV and the R1T pickup truck. Both vehicles have all-wheel drives and they look to be very impressive off-road. I'm not a truck guy, but I will admit they look pretty cool. In terms of specs, the R1T pretty much matches up against any gasoline-powered truck in the market with 11,000 pounds of towing capacity. It'll have 400 miles of range and 750 horsepower. Both the R1T and the R1S will start around $70,000, so not cheap by any means, but they do plan on launching a cheaper version later. One of the biggest headlines for the stock is the fact that it's owned 20% by Amazon, which is a pretty large percentage. And Amazon has contracted Rivian to produce and deliver 100,000 electric vans by the year 2030, of which so far Rivian has delivered none. But they're expected to start going out this month and about tens of thousands next year according to Amazon. There are other EV startups competing for the same last mile delivery space like Lion Electric, but they got an order for just 2,500 from Amazon for their electric vans, which obviously is quite minuscule compared to the 100,000 that they've ordered from Rivian. And this is where I think that investment and partnership with Rivian and Amazon will go a long way for Rivian because Amazon will have its back. But it's important to remember that Amazon isn't contractually obligated to buy those 100,000 vans from Rivian, but it does have exclusivity. So it can technically just walk away from the whole deal and it would literally cripple Rivian because they can't sell to anyone else. But of course, given that Amazon has invested $1 billion into this, it's obviously very low likelihood that they're going to do this. Ford is another big investor in Rivian, which is an interesting one because it should give Rivian some advantages when it comes to production if it can piggyback off Ford's knowledge. However, I do think that the Ford F-150 Lightning, which is the EV version of the F-150, is going to be Rivian R1T's most competitive threat. The F-150 is America's favorite truck and it's this best-selling truck, and the EV version is pretty damn cool. It's also coming at a much cheaper price point at $40,000. It also has over 160,000 reservations so far versus the 50,000 that Rivian has, and 50,000 is no small number here, but my point is they're legit competitors. Okay, so now our favorite part, or our least favorite part, valuation. So let's start by saying and addressing the fact that Rivian has no revenue. So this automatically brings up risk. We're gonna have to start our analysis from 2022. By risk, what I mean is now you're investing in a company with zero revenue. There's a lot of execution risk and you don't know how this is going to turn out. You're investing very early in a company. So what are you going to expect in return? You have to expect a higher margin of safety and a higher return to be compensated for that risk. And in order to calculate that risk, we have to take a look at the qualitative factors, which I mentioned previously, and also some quantitative analysis and comparison against its peers like Tesla, like Lucid, or Lion Electric. What you're looking at here is the SPAC screener tool that I use to compare the different SPACs that came out, and I started adding different industries and categories, so EV charging, commercial EV, and you can see a bunch of other stuff here, but you can ignore it because for the purposes of this video, we're just gonna focus on these two sections and mostly Rivian, and that's what this video is about. So you can see here, I assumed a $70 price per share. Of course, I don't know what it's gonna open at. I just assumed $70 for the purpose of this analysis. It can open a lot higher, which obviously would change the numbers and the assumptions that we're making here. So keep that in mind. And if you want access to the spreadsheet, of course, you'd have to sign up to my newsletter. The link is in the description, and this spreadsheet you can also access for free. So as you can see here, I forecasted their 2022 revenues to be about 10.5 billion. And how did I get that number? Well, you can see here 100,000 vehicles, which is their max capacity. So we don't know if this is going to actually happen. There's a high likelihood it doesn't, times the average selling price of 70,000. So they're also expected to expand capacity in 2023 to about 200,000 vehicles. So I gave them about 14 billion there. There's again a lot of execution risk should this not happen. But it's also important to note that my forecast also excludes things like the other lifetime expected revenues of each vehicle, like software, autonomous driving, services, charging, which according to Rivian adds up to about $65,000 a vehicle. So almost twice the revenue over time, but we're just gonna ignore those. So I'm not gonna say this is conservative, but you know, there's a lot of risk to this, but let's just assume this for the purpose of this analysis. Now, price to sales is literally the only way you can compare it against its competitors here, like Lucid, Rivian, Tesla. There's just no other way because they're obviously so early. This is a very early stage company. So Tesla, you can see, is trading at a 16 times 2022 price to sales, whereas Rivian's about 5. So I expect to be at a discount. I'm not gonna pay the same premium for Tesla, because if it is, I'm gonna buy Tesla. There's just no way I'm gonna buy Rivian over Tesla if they're trading at the same valuation multiple. It just makes no sense because Tesla's also already profitable and they're already proven. And you can see here, Lucid is at 33 times. So Lucid is pretty damn expensive now that I look at it. And when you see it and you compare it side by side, I don't know. I just don't, I see it hard to make the case to buy Lucid over Tesla, but I get it, Lucid's a lot earlier, so there's a lot more upside ahead, whereas the growth rate for Tesla is going to be a lot lower. So again, I have to do a deeper dive on that. But let's take a look at another competitor here, which is Lion Electric. And you can see here, Lion Electric is trading at about less than 4 times price to sales, and they're in the same class of electric vans. They just don't have the the passenger vehicles or the pickup trucks and the SUVs, which Rivian has. So, but it's a legit, you know, competitor and peer, which you can see here and compare, that is trading at a much lower valuation, which is probably more attractive. So it's something to think about. But at 5 or 6 times price to sales, you can see it's not absurd. Your first reaction, of course, is, okay, this thing is just worth so much, 65 billion and no sales, you're gonna write it off. But when you take a little deeper look into it, it's not absurd given where valuations are in the EV space. But it just all comes down to you, what kind of risk you can handle and which one of these would you rather invest in. I've already hammered this in throughout the video, so let's just go over some of the 2 key risks which I want to highlight again, which is competition and execution risk. In terms of competition, we already know it's pretty fierce. There's a lot of competitors out there. The Ford F-150, the Tesla Cybertruck, and other EV startups and legacy automakers. In terms of vans, there's also other competitors like the Ford E-Transit, the Mercedes E-Sprinter. But given Amazon's partnership with Rivian, I do think it has a competitive edge here to mitigate that risk. But there's another risk, like I said, that's pretty hard to mitigate, which is execution risk. Rivian has already delayed its first deliveries, and given the fact that it's zero revenues, it hasn't proven anything yet, it's gonna be a long road to scale, and it's gonna be a difficult one. We've seen this from Tesla. It's not gonna be easy, and this is a big risk that we need to consider should we invest in this company. So Rivian, the first thing you notice is sticker shock at the valuation. The valuation, the first thing that's gonna come to your head, if you're anything like me, is gonna be, why the hell am I gonna pay 65 billion for a company that's making 0 cars? And that's a legit question. Why should you? And there has to be a compelling reason for that. So it should be the next Tesla. And this is where it should be part of your portfolio if you're going to take bets like this, to have other legacy automakers like Ford, which have compelling valuations and you can take a lower risk with that high upside. You should also potentially diversify with charging stocks and other picks and shovels play in the EV space. Don't go all in with something like this risky, which is not something that I'm going to do should I get in on this. So what price would I get in on this? I think around the $70 price point is what makes sense to me. This is where I showed you on my spreadsheet. Should it go a little higher, 70 to maybe $75, $80 is where I would consider putting some chips in. Again, this would just be a very small amount that I would literally just put in and forget. And if I lost it all, I don't care. Should it go up and do well, I might add to it. But I'm expecting this to rip from day one, but I do expect this to go down at some point down in the future where lockup expires and whatnot, in which case I would add to it. So let's see what happens. Honestly, I'm not too stuck on it. I might just put some money in, like I said, just to see how it goes and be part of it and just go on the ride. It's one of those things, a very small amount. So if you're gonna go on this, I would recommend you do the same thing. Don't go all in, just consider the risk that you have investing in this company. So that's it for this video. If you liked the video, then please like the video and subscribe and subscribe to my newsletter. The link is in the description. Let me know your thoughts. Let me know your thoughts on the video. Let me know your thoughts on Rivian, and let me know what you're gonna do.